Thanks, Emily. Melody's going to be manning the chat and Q&A, and will do her best to let me know if there's anything that pops up during today's presentation that needs some more clarification, and answering questions as they come up. But I do just want to stress, following what Emily said, we do have a lot of people attending the program today. And so we wanted to make sure that we did our best to address as many questions that came in beforehand as possible, while also giving you some timely updates. So with that, we'll go ahead and dive right into things. So I just wanted to start off with a few PPP stats. If you're on this call, my assumption is that you have received a PPP loan, you're using the funds or have used all the funds, you're thinking about forgiveness, maybe you've already applied. So it didn't want to kind of rehash too many things that we may have gone over before, but wanted to just kind of talk about some of the stats to date. So applications were accepted until August 8th. Hard to believe that that was, my goodness, almost 3 months ago now that the applications were accepted through. A little over 5.2 million loans were approved for over $525 billion. Just doing the quick math there, we can see that the average loan was around $100,000. The expectation for PPP2 negotiations continue to be ongoing. As you can see, about $124 billion remains unspent from the first 2 rounds of PPP funding. So there's still a bucket of money that's available but not accessible right now. And we continue to wait for a second round. The second round is going to come. It is more than likely that we'll have a second round. If that will be focused on certain industries or certain businesses with certain thresholds met, we don't know any of those details at this point. As has been habit with many of our webinars or many of our trainings, Melody and I have found that 9 times out of 10, there's often something big that happens while we're doing one of these webinars. So I can tell you that I did check the news right before this session. The one item I can report is that there was a $500 billion stimulus package that included some PPP funds that failed to make it through the Senate. So at this point, nothing huge, but I'm not gonna have you hold me to that, because we've got an hour here that I won't be able to access any news or updates. So it could be that when we get off this call, we'll have some piece of information. Hopefully you're on one of our mailing lists, so you get that information as soon as we send it out. So just know that PPP2 negotiations continue to be up in the air. I would find it highly unlikely that anything's going to happen before the election. We're 2 weeks out from the election now, and it just doesn't seem like it's probably going to happen. So we may be waiting a few more weeks until anything happens, but please make sure you stay in touch, and we'll definitely let you know as soon as it is. One item that I did just want to mention that I have read is hopefully part of some of the ongoing negotiations. I know that Wagner has a lot of 501c6 association clients, and the hope is that they have they've done enough rallying to hopefully be a part of the next round of PPP funding that comes available. So we'll see what happens. Nothing is guaranteed, but just wanted to make sure that if we've got anybody on the call, that is something that we're hoping for. So I wanted to go through some recent updates. It's been a little while since we've had one of our webinars, and there have been some important updates and guidelines that have come out in the last month or two. One of the big ones for many of our cooperative clients and just many of our other clients was that we got a definition of owner-employee. Before, the definition was just an owner that was also an employee, which wasn't very helpful. Now we have a more definitive definition, and that is an owner with 5% or more ownership that is also an employee. So if you have owners that have a less than 5% stake in a business, they are not considered owner employees. We'll talk a little bit later in the presentation about what some of the limitations are for your owner employees and the use of PPP funds. Another recent update was the rules around related party interest and rent. Related party interest, so interest paid to an entity that is related in ownership, affiliation, Related party interest is not eligible. It's not an eligible use of PPP funds. And if you are paying a related party rent, that rent is only eligible to the extent that it does not exceed the mortgage interest owed. So if you have a related party that is charging you rent and it's charging you more than the amount of the interest that they owe on their mortgage, you are only able to use the rent up to the amount that it is the same as the mortgage interest. So make sure that you're talking to your accountant, make sure that you're talking to, if you have somebody that does your taxes, they may be able to help you a little bit with related party rules. But this was one that was fairly applicable to many of our clients that have related party interest. In addition, there was a change in ownership rules procedural notice. There were quite a few things involved in this change in ownership rules. I didn't want to go through too much of it in depth as it is a fairly specific situation. What I wanted to stress was that if you are in the process of selling or merging your business, if you have already done it and you received a PPP loan, please note that there is a procedural notice that you're going to need to read through and address, as there are specific rules related to organizations that are changing ownership and have a PPP loan. Just high level, some of the items, what a change in ownership is defined as is at least 20% of the common stock of a PPP borrower is sold or transferred. If the PPP borrower sells or transfers at least 50% of its assets, or if the PPP borrower merged with or into another entity. So if your organization is going through any of those things right now, or you plan to in the near future, please make sure that you're reviewing that procedural notice and taking note of the items that you need to be in compliance with. There are rules about what you'll need to let the SBA know, what you'll need to let your lenders know, and how that change in ownership will apply to your past, current, and future owners regarding the PPP loan. So please make sure that you're referencing that. So with today's webinar, we wanted to make sure that, like I said, we were addressing some of the questions that came in before, and we're addressing a lot of the questions that we continue to get from people that are looking to apply for forgiveness or thinking about applying for forgiveness. So some of the important factors that you should be considering, have you spent all of your PPP funds? Now that everybody automatically has 24 weeks to spend the PPP funds, there shouldn't be a big issue in being able to spend them. So you'll want to be thinking about when you did actually spend the full amount of your PPP funds. We also don't have all of the guidance in yet. There's going to be more clarification. There's going to be more rules, things to consider. Will there be additional simplified forgiveness levels? We're going to talk a little bit about one of the biggest updates that we saw in the last few weeks, but is that it? We don't know. So that's something to be considering. The deductibility of expenses paid with PPP funds. So this is a tax item for any of our for-profit organizations that are on the call today. The current rule is that expenses paid with the forgiven PPP funds are not eligible tax deductions. So that impacts a lot of PPP borrowers, and it's something that you really need to think about. Hopefully you have somebody that's doing your taxes, whether it's Wegner or somebody else, and it's something that you need to consider. Tax planning is obviously a huge thing that would be happening kind of around now through the end of the year. You're going to need to be likely conservative in thinking about estimated payments or what you're going to owe. But right now, as it states, any of those expenses that were covered using forgiven PPP funds will not be eligible tax deductions. You're going to want to be thinking about your lender instructions. So we can give you an overview of what you'll need and what needs to be done, but ultimately it's going to come down to your individual lenders. They're going to have their own portals. I have seen a number of lenders that are asking for additional items that aren't on the applications, the list of items that you'll need to send. So what we can do is we can provide you with that list that's on the application. but you'll always want to continue to be in touch with your lender. Make sure that if your lender is sending out emails to you with instructions, or if they've updated their website, that you're keeping up to date with that, because each lender will have a slightly different process and may expect different things from their borrowers. The last item to be thinking about is the eligible expenses that you're going to use, payroll versus non-payroll. If you are using the 24-week period, it's very likely that you're going to be able to use all of the PPP funds for payroll expenses. So be thinking about that. We'll talk a little bit more when we talk about the differences in the covered period, but just be thinking, you know, if it makes sense to use all of the funds for payroll, then you don't really have to think about the 60% of using it 60% for payroll versus non-payroll. There are a few things that you can kind of take out of the equation. So these are just some of the high level factors that you'll want to consider going into forgiveness and continuing to use the funds. Forgiveness forms and due dates. This is one of the biggest pieces of new guidance that we've gotten in the last few weeks. So October 8th, we got a new form, the 3508S. That form joined the 3508EZ and the standard 3508 form. These are 3 different forgiveness forms. There are 3 different reasons that you would file. You only need to file one of the 3, but there are different qualifications that you'll need to meet to file one of them. In regards to due dates, another piece of guidance, a clarifying guidance that came out recently was when payments are due and when the forgiveness application is due. Everyone must apply. If you plan on applying for forgiveness, I will say there is nothing that states that you have to apply for forgiveness. I don't know why you wouldn't, at least try, but there is no reason that you absolutely have to. If you don't apply for forgiveness within the time period, then payments are due right away at the end of that time period. So you must apply, if you're going to apply for forgiveness, you must apply within 10 months after the last day of your covered period. So if you chose to opt into an 8-week covered period, your loan forgiveness application is due within 10 months after the last day of that 8-week period. Same goes for the 24-week period. So again, we'll talk a little bit later about the 8 versus 24 weeks. And again, if you don't apply within that period, payments will automatically be due starting 10 months after the last day of your covered period. So you want to make sure, 10 months is a long time, but if we've learned anything over the last 7 months, time sure does fly when you're having fun, as much as we've been having fun. And you just want to make sure that you've got kind of that date range in mind, because you don't want to miss filing for forgiveness. And there won't, as of now, there isn't anything you can do if you do miss that 10-month period. So it's important to be thinking about, if you did opt into that 8 weeks and you got your loan right at the beginning, let's say you got your loan first week or 2 of April, that 10-month period is going to end, I believe it's the end of March or end of February, beginning of March. That timeline is going to come due. So that's sooner than we think it is. With the holidays and year end approaching, it's important to be thinking about that. If for some reason your loan is not fully forgiven, loan payments will begin after the lender has received any forgiven portion of the loan from the SBA. Your lender will let you know what the repayment plan is and when your first payment is due. So again, be making sure that you're in touch with your lender, you're keeping in touch with them. I know how busy lenders are right now, but just make sure you're doing everything you can to be in touch with them. The timeline that the bank and the SBA have, if you have submitted your forgiveness form, the bank has 60 days to approve the loan after you have submitted it to them, and then they must submit it to the SBA. And then the SBA has 90 days to approve your loan and remit the forgiven funds back to your lender. So all in all, it's about 5 months that the process could potentially take. I do know that some banks have begun processing the loan forgiveness applications, and we do have confirmation that the SBA has begun to approve applications submitted by lenders. So we have stressed patience, and I would continue to stress patience if you feel like you are still using the funds or you're still unsure of something. However, I can report that the SBA has begun to fully process these loans. So it may be worth it to start getting the process in place for your organization. So let's talk a little bit more about the simplified forgiveness. So this is the form 3508S. This came out on October 8th. It is a much streamlined application. This application applies to borrowers that received a PPP loan of $50,000 or less. So this is a blanket application for anybody that received a PPP loan of $50,000 or less, and that you can certify that you use the funds for eligible purposes. So the only reason that you may not be able to fill out the 3508S and you got $50,000 or less is if you're part of an affiliated group that received PPP loans totaling $2 million or more. So if you are part of an affiliated group, hopefully you know that, and you'll need to kind of tally up all of the PPP loans that your affiliated group received. If it's $2 million or more, you can't fill out the 3508S. For any organizations that aren't a part of affiliated group, if you received a loan that's $50,000 or less, you can automatically fill out the 3508S. There are no other factors that you need to fall into to be able to fill out that application. This application automatically eliminates the need to calculate any of the penalties related to a reduction in FTEs or a reduction in your employee's salary or wages. So this is great news. This was an exciting, I think it was a Friday morning, October 8th was Friday. It was exciting that this came out. We had been waiting for some level of simplified forgiveness, streamlined forgiveness for quite a while. The hope was that it was going to be in the $100,000 or $150,000 range, which obviously didn't happen. Essentially, the $50,000 threshold is covering most organizations that are either, it's a one-person shop, so it's a self-employed individual, or they have minimal employees. The SBA felt that this mitigated their risk, that loans related to employers that either had no employees or very few employees were the least risky of all of the loans. So that's part of the backstory as to how the $50,000 number came to be. We've had a number of communications within our firm discussing whether or not we think there's going to be additional simplified forgiveness. At this point, I think that it's not likely, but who knows? Things change daily. I've been proven wrong before in these last 7 months when we get new information, but I wouldn't count on there being additional simplified forgiveness for loans under or between a certain amount. I think the $50,000 is probably going to be the one that sticks. A little bit more information about the form. While it is very much streamlined, it is not automatic forgiveness. There are still certifications that you have to sign off on. You have to sign off that you didn't commit fraud, that you used the PPP funds for eligible payroll or non-payroll expenses. And you do still have to submit substantiated documents to your lender. So you're going to need to include payroll reports that show that you used all of the funds. If you are going to say that you used it for rent or utilities, you're going to need to include all of that backup documentation and submit that to your lender. So I want to just make sure that everybody knows that it isn't just sign off and it's forgiven. You do still need to do a little bit of work, but it is certainly much less than the two other available forms. And just a reminder to keep the documentation for 6 years. There is a 6-year review process that leaves any PPP loan. So it doesn't matter if you received $10,000 or $5 million. The review period is open for 6 years regardless. So even if you have your loan fully forgiven, there is the potential that the SBA or the Treasury could come back and audit your loan at any point in the 6 years after the origination date of the loan. So make sure that you keep all documentation on file. We wanted to go through the easy form again, just to make sure that everybody understands what other forms are available. So if you received a loan over $50,000, then you fall into the category of having two options for forgiveness applications. You have either the easy form or the standard form. The easy form is available for anybody that falls into one of the three categories listed below. You are self-employed, an independent contractor, or a sole proprietor, and you have no employees, so you're just reporting yourself. Many of these organizations are likely going to fall into that 3508S simplified form. But if your loan was for more than $50,000, you would be looking at the easy form. The second bucket that you may fall into to be able to file the easy form is that you had no annual salary or hourly wage reductions by more than 25%, and you had no reductions in your FTEs. So essentially, your business was able to operate for the most part as normal. You didn't have any substantial changes to your workforce in terms of wages or hours. The third bucket you may fall into is that you did not reduce any of your annual salary or hourly wages by more than 25%, and you were unable to operate during the covered period at the same level of business as you were at pre-pandemic. That 2/15/2020 date is kind of our pre-pandemic cutoff date. So if you fall into one of these three categories, you can file the easy form. The easy form eliminates the need for filling out the Schedule A and Schedule A worksheet. It eliminates some of the additional calculations that you have to do. There are still calculations that need to be done for the easy form. You still need to make certifications that you used the funds for the correct purposes, you didn't commit fraud, etc. But there is a few less calculations if you are able to fit into one of these buckets and file the easy form. A lot of the questions that we had from everybody on the call related to a few things. So full-time equivalent, so FTE stands for full-time equivalents. Hopefully everybody's read up a little bit on FTE employees. FTE has certainly been a buzz acronym over the last 7 months. FTE stands for full-time equivalent, and it's essentially what an employee works, if you work 20 hours a week, you're a 0.5 FTE. So it's not an employee head count, it's a full-time equivalent count for your employees. And the PPP, the SBA, for the PPP, excuse me, the SBA had defined one full-time equivalent as somebody that works 40 hours or more in a week. So that's what we had to go on. And so that's how these FTE calculations had to be done. There were some FTE safe harbors. What the safe harbor is it's an exemption from the reduction in loan forgiveness based on the reduction in FTEs if you met one of the following items. So if the borrower in good faith was able to document that you couldn't operate between February 15th and the end of your covered period, or March 1st and the end of the year due to health guidance. For example, here in Madison, I'm in Madison, Wisconsin, Dane County, we have a lot of limitations, for example, for restaurants. They can only be, I believe, indoors at 25% capacity. I know we had some grocery clients that had to shut down their salad bars or their hot bars. All of those items would allow you to fall into this first safe harbor, that you weren't able to operate at the normal level of business as before the pandemic started. You do need to have documentation showing what guidance you're following that forced you to not be able to work at the same capacity that you were before. But that is one reason that you would be exempt from the reduction in FTEs. So if you had to lay people off or furlough staff due to the fact that you couldn't operate at the same capacity, that is a safe harbor for you, which means that you won't be penalized for reducing your FTE count. The second safe harbor is related to a time period safe harbor. If you had to reduce your full-time equivalent levels in the period between February 15th and ending April 26th, which was kind of the beginning of the pandemic, but you were able to restore your FTE levels by the end of this year, then you would not be subject to a reduction in your full-time equivalents. You won't be subject to a reduction in your loan forgiveness based on full-time equivalents. I will talk about this in a few slides, but I do want to make sure that it's clear that if you do choose to apply for forgiveness before the end of the 24-week covered period, you do lose the opportunity to use safe harbor number 2. Now, since things are still going the way they're going, my guess is that most organizations would not find it feasible to rehire all of their staff by the end of the year. But I do just want to make sure that it's clear that if you do choose to apply for forgiveness before the end of the year, before the end of your 24-week covered period is up, you do lose the ability to use that second safe harbor that you rehire by the end of the year. Obviously, if you file for forgiveness before the end of the year, there's no way to determine if you did rehire people by the end of the year. So that's just important to note. Some of the FTE reduction exceptions, so these are different than the safe harbors. Safe harbors are reasons that you couldn't comply with the FTE reduction essentially based on the pandemic. Then we have FTE reduction exceptions. So there are 3 exceptions that you may meet. Any position for which you made a good faith written offer to rehire somebody who was an employee, and you weren't able to hire a similarly qualified employee for an unfilled position before the end of the year. So let's say that you had to let somebody go, around the end of March, and you made an offer to rehire them or somebody else that was similarly qualified, and they didn't accept the rehire or the new hire offer. As long as you have it documented that you made that good faith written offer to rehire or to hire somebody new, you won't be penalized for losing that FTE. The second FTE reduction exception is if you made a good faith written offer to restore the reduction in hours at the same salary or wages during the covered period, and your employee rejected the offer. So perhaps you had to cut hours for a staff, somebody that was working 40 hours, you let them know based on dollars coming in that you had to cut them down to 30 hours. At some point in your covered period, you made a good faith written offer to get them back to 40 hours a week, and the employee said, no, I want to continue working 30 hours. Again, as long as you have that in writing and documented, that is not going to go against you in terms of your FTE count. That is going to be an exception to the FTE reduction. The third reduction exception is any employees who were fired for cause, voluntarily resigned, or voluntarily requested and received a reduction of their hours. I know we had a number of people asking at the beginning that people were on performance improvement plans, and were they still allowed to let them go if they weren't performing? The answer is yes. Again, make sure that you have it documented, written down. We had clients that had people retiring. Could they still retire? Of course, they can still retire, and that won't count against you in your FTE calculations. So make sure that you're thinking about these, and as we've stressed, through this entire 7-month period, certainly we're accountants, we stress it often, but documentation, documentation, documentation. If possible, whenever possible, have things in writing, get signatures on them if you can, But just make sure that you're keeping that information, you're keeping any offers, you're keeping any rejections, you're keeping all of that information. You're not going to have to submit that to the lender, but you are going to have to keep it on file for that 6-year period in case you do get audited and you need to explain why you had a reduction exception. This list here is not all inclusive, but it gives you a good idea of what documents you're going to need. Number 1, to submit with your application, and number 2, documents that you will need to maintain, but not necessarily submit with your forgiveness application. As a reminder, this will vary a little bit based on the application that you're filing. However, for the most part, across all 3 potential applications, most of the documents that are needed are pretty well in line with all of the rest. So things that you'll want to be thinking about gathering if you haven't started already are your payroll reports. So payroll reports need to be in detail, so they need to be by employee. They should have gross salary for the covered period. They should have hours, if you have that information available, included on the payroll reports. You'll need payroll tax filings for any quarters that your PPP loan and forgiveness period cover. So for many organizations, it's likely going to be Q2 and Q3 for sure that you're going to need payroll tax filings for. They are looking for the quarterly 941 filings and the quarterly state unemployment forms. You'll also need receipts, canceled checks, or account statements if you're including your employer paid health insurance and or retirement contributions in your eligible payroll expenses. You'll need documentation to support your FTE calculations. This is if you're using the standard form or if you are using the easy form and you are filing it based on that second bucket that you can fall into, which is you are stating that you didn't reduce your FTE count and that you didn't reduce any salaries or wages by more than 25%. One of the items listed, if you're filing the easy form based on that exception, is that you do need to show that you had the same or more FTEs at the end of your covered period as you did at the beginning of the year. So just know that that's one of the documents that you do still need if you're filing the easy form. It is listed in the instructions for the easy form as well. If you are using mortgage interest, you'll need amortization schedules for your mortgage interest. You'll need receipts and canceled checks or account statements for any eligible services, rent that you paid on personal or real property, any utility statements, receipts or canceled checks. And as a reminder, those services or agreements needed to be in place as of February 15th of this year. So if you started renting a new space in March of 2020, the rent for that space will not be an eligible use of PPP funds. If you renewed a lease or renewed a loan, that would still be eligible for PPP. But if it is a brand new service, let's say you sign up for a new internet service in March or in April, those would not be eligible. You'll also need copies of current lease agreements and copies of any invoices. So those are all items that if you are using those expenses to apply for forgiveness, you're going to need to be thinking about gathering that information to actually submit with your application. Information that you're going to need but not submit. Again, we're stressing to keep the documents for at least 6 years. If you're filing the standard form, there is a Schedule A that goes along with the standard form. And there is also a Schedule A worksheet. You do not need to submit the Schedule A worksheet, but you do want to keep that on hand for 6 years. Similar to what we were just talking about on the last slide, any written documentation regarding employee job offers and refusals, you won't need to submit, but you do want to keep on hand. And then documentation supporting the certification that the business was not able to operate. That's going to be, compliance with health standards, state and local, or federal compliance. You're going to need to just have on hand whatever the documentation was that stated you could only operate at 25% capacity, or you couldn't have a buffet open. You'll just want to make sure that you have something that states what the time period is. And then any records that support the borrower's necessity of the loan request, eligibility for the loan, and request for forgiveness. So the more documentation, the better. Just to keep on file, make sure you keep it for 6 years, as somebody may request it if you are audited by the SBA or the Treasury in the future. Another question that we saw come up pretty frequently was the question about 8 weeks versus 24 weeks. So I wanted to talk a little bit about pros and cons between both, and then on the next slide we'll address kind of the bigger overall question. So in thinking about the 8 versus the 24-week period, a reminder that the 8-week period is only available if you received your PPP loan prior to June 5th. So on June 5th, the Paycheck Protection Program Flexibility Act was passed, and that is the act that extended the covered period to 24 weeks. So it automatically extended all loans to 24 weeks. But it also stated that anybody that received their PPP loan prior to June 5th could opt into the 8-week period if they so chose. Some of the pros related to using the 8-week period, you only need to come up with documentation for that 8 weeks worth of eligible expenses. So that may make it a little bit easier for you to pull reports, pull statements, because you really only need it for about 2 months worth of eligible expenses. And then a reminder that the loan forgiveness application will be due within 10 months after the last day of your covered period. So if you did choose an 8-week covered period, like I mentioned before, and you got your loan right at the beginning of when the CARES Act came out, which would have been, probably the first 2 weeks or so of April, there were a lot of people that got loans in that period. That 10 months is going to be coming up pretty soon. It'll be early next year that you'll need to have filed a forgiveness application by to ensure that you receive some level of forgiveness. So that's something that you need to be thinking about. If you do choose the 24-week period, just remember that is the default. So you actually have to opt into the 8 weeks. It does allow you to use all of your funds for eligible payroll expenses. So if you had concerns about being able to use the PPP funds for only payroll expenses, or more than at least 60% for payroll expenses, stretching it out to that 24-week period really kind of ensures that you can use it just for eligible payroll expenses. What I have seen with some of our clients that have begun the forgiveness process, they essentially only need to come up with payroll reports because their gross payroll in the 24-week period covers more than enough of their PPP funds. So instead of having to pull lease agreements and utility statements or getting canceled checks or receipts from health insurance payments or 401k payments, we're able to just use a payroll report for their backup documentation because it more than covers the use of their PPP funds. So that's one of the benefits of using the 24-week period instead of the 8, is that you really can just focus on those payroll expenses. In addition, similar to with the 8-week period, the loan forgiveness application will be due within 10 months after the last day of the covered period. So what it's also doing is extending your time to apply for forgiveness. And if you don't believe that your entire loan will be forgiven, it is essentially delaying when you'll have to make your first payment on any amount that isn't forgiven. So there are some benefits to going with the 24-week model. We have had quite a few people just decide to opt into the 8 weeks because they know they spent it. Perhaps they had hired more people this year than they had last year, so it was very easy for them to use it in the 8-week period. But it's really going to be kind of a preference based on these items. Are you interested? Do you want to make sure that you get applied right away and you used it in the 8 weeks? I'd say use the 8 weeks. If you maybe had to cut some staff, if you didn't have as many non-payroll eligible costs, then you're probably going to want to think about stretching it to the 24 weeks. So a big question that has come up, what if it took longer than 8 weeks to use the funds, but less than 24 weeks? That's a great question, and a question that we actually don't have a final answer for. We have we have sort of, I'll call it a hearsay answer. It's an answer that we've come to based on the information that's provided so far. So we did find out, it's been a few months now, that the SBA announced that you could apply for forgiveness as soon as you've used all of the funds. So what that kind of said was it threw us really in between that 8 and 24 week period. So maybe it took you longer than 8 weeks to use the funds, but after 12 weeks, you had used them all. The SBA said, okay, you can go ahead and apply for forgiveness as soon as you've used all of those funds. As a reminder, going back to a reference from a few slides ago, if you do apply for forgiveness before the end of your 24-week period, you'll lose that full-time equivalent safe harbor rehire date of 12/31. So if you applied for forgiveness right now, let's say your covered period ended up being about 15 weeks that you were able to use all of your PPP funds in. You decide to apply for forgiveness right now, but you had to cut some staff. So now you're going to fall into having to do a full-time equivalent reduction calculation, which is going to reduce the amount of forgiveness you'll be able to achieve. If you think you may be able to rehire all of those staff and get your full-time equivalent count back up to what it was, before the pandemic, by the end of the year, don't apply for forgiveness yet. You're going to want to wait until the end of the year passes. You can prove that you've rehired everybody and then apply for forgiveness, because then you're going to have that FTE safe harbor rehire date in effect. If you apply now and you had to cut staff, you lose the ability to you can still rehire people, but you're not going to see an elimination of the FTE reduction. You're going to have to factor that in when you go to apply for forgiveness. So that is one thing you want to consider, that if you did have to cut staff and you think there's a chance that you may be able to rehire people by the end of the year, you're probably going to want to hold off on applying for forgiveness until that point. Also, if you use the funds in a period sometime between 8 or 24 weeks, and you had to cut salaries, let's say you cut salaries by 30% across the board. If you decide to apply early, you have to note that you do actually have to calculate those wage reductions based on a 24-week period. So even if your 24-week period isn't over yet, your forgiveness is going to be reduced by the total wage reductions over a 24-week period. Now, that I've had to read that quite a few times to make sure that I understand it. So I realize that it's probably a little bit confusing, but the idea is that if you apply for forgiveness before the end of the 24-week period, you still have to calculate wage reductions as if you were using the full 24-week period. Some of the other calculations that you'll have to do, payroll expenses paid, money spent, FTE reductions, are then calculated based on the number of weeks it took to use the funds. So those calculations are prorated, but the wage reduction calculation is not. So those are things that you're going to need to consider if you do fall into, the category of having had to reduce staff or had to cut wages. So those are important things to be thinking about. So we wanted to talk a little bit, if you've attended any of our webinars before, we wanted to just hit on a few things again that we felt were important and we felt that we wanted to remind everybody about. I talked a little bit about owner employees at the beginning and the definition that we got of who an owner employee is. If you are a C corporation, an S corporation, a partnership, or you file a Schedule C or F, there are certain limitations, certain caps on owner employees' wages if you are using PPP funds to cover the owner employee wages. If you're a C Corp or an S Corp, actually, if you're any of these entities, the owner employees' wages are actually going to be, the amount that you can use the PPP funds for are going to be based on their 2019 compensation. One example I'll give, if you are a C corporation and you have an owner employee, they own 20% of the business, and for some reason they did not receive a W-2 in 2019. but they are receiving a W-2 in 2020. You cannot use the PPP funds to cover any of that owner employee's wages in 2020 because they did not receive any actual wages in 2019. So you need to be thinking about that when you're filing for forgiveness. There is a section that is specific to owner employees, and there are certain thresholds related to owner employees, and it is going to be based off of your 2019 compensation. Compensation still, using the PPP funds, you cannot pay for any employee, including owner employees, more than $100,000 on an annualized basis. So if an owner employee was paid $150,000 in 2019, the cap to use PPP funds to pay them in 2020 is going to be capped at $100,000. For general partners, it's their 2019 net earnings from self-employment, which would be found on the K-1. For Schedule C and F, it's owner compensation replacement. So it's based on your 2019 net profit. If you were a Schedule C or a Schedule F filer and you didn't have any employees, so it's just yourself, and you had a net loss or you broke even in 2019, you were not eligible for a PPP loan, as there was no way to compensate or to calculate owner compensation replacement. The next few slides cover a few of the FAQ highlights. Again, if you've attended any of our webinars or if you've been keeping up to date with all things PPP, there are a few different ways that we receive new guidance. There are interim final rulings. Those tend to be a little bit longer in length. They go into the Federal Register as law. They are there for us to follow and read through. There are also two different sets now of frequently asked questions that are updated as new information comes out. These are put out by the Treasury, so they are valid answers to questions that you can use as guidance. And then there are procedural notices. Some of those have come out mostly relating to things involving the lenders, but the change in ownership was a procedural notice that came out a few months ago, or about a month ago as well. These were some frequently asked questions highlights that came out over the last few months, likely since we've had our last webinar. So we wanted to just draw attention to some of the highlights. When does a borrower need to begin making loan payments? Payments will be due once the SBA remits any forgivable portion of the loan to the lender. So again, this is stressing that you just need to be in contact with your lender. They should be letting you know as soon as the SBA has remitted the forgiven funds. And if there is still a balance due, they will work with you to come up with a repayment schedule. But the payments would be due at that point in time. Incurred is a big buzzword that we've seen over the last 7 months. The question is, are payroll costs incurred before the covered period but paid during the covered period eligible? And the answer was yes. It was established that the language was incurred and paid. So we wanted to make sure that that was clear. What types of salaries and wages are eligible? Any cash compensation, including tips, lost commissions, bonuses, and other forms of incentive pay. So hazard pay has been huge. In the last 7 months, hazard pay is eligible. If you're paying people paid time off, vacation pay, all of those are eligible. The only salary and wages that aren't eligible are those over $100,000 on an annualized basis, or wages and salaries that were paid under the Families First Coronavirus Act. They were extended sick and family leave related to COVID. They're very specific, very related to very specific reasons that you would pay somebody. You can't also use PPP funds to cover those because there is a credit involved in paying under FFCRA. If a borrower elects to use the alternative payroll covered period for payroll costs, does that covered period apply to non-payroll costs? And the answer was no. You must use the standard covered period that begins on the disbursement date for any non-payroll eligible costs. With the 24-week period, that alternative payroll covered period hasn't played as big of a factor as I think it may have if you were opting into the 8-week period. The alternative payroll covered period allows you, if you have a weekly or biweekly payroll, to have your covered period begin on the first day of the payroll period that begins after you received your PPP funds. So if you have a biweekly or weekly payroll, you could opt into that alternative payroll covered period. It just allowed for ease of pulling reports, because in those instances, you're going to be able to pull exactly 8 weeks payroll period that lasts 8 weeks, which is going to align with with your payroll periods. So it just made it easier for pulling reports. But you do have to use the standard covered period for any non-payroll costs. There were some updated FAQs on interest. If it's on unsecured credit, is it eligible for loan forgiveness? And the answer was no. Only payments of interest on business, mortgage, on real or personal property are eligible for forgiveness. So if you are thinking about needing to use that as one of your non-payroll costs, just make sure that you understand those rules. Payments on renewed lease or refinance mortgages, they are eligible as long as the lease or mortgage existed prior to February 15th. Transportation was a huge question. That's an eligible utility cost, and nobody was quite sure what it means. They defined it a bit by saying that transportation utility fees assessed by state and local governments are what they were referring to as eligible. FTE reductions, do they apply to employees that make over $100,000? The answer is yes. The only employees that don't get factored into FTE reductions are your owner employees. When calculating the reduction in salary and wages, are all forms of compensation included in the reduction calculation? For purposes of calculating the reduction, the borrower should only take into account decreases in salaries or wages. So if you're paying hazard pay or paying bonuses, you shouldn't be taking those into consideration when calculating the wage reduction. So we're at about 5 minutes left. That worked out well, timing well. I know everything. I went through everything pretty quickly, but there's still so much to go through. We did want to make sure that we reminded everybody that we've done quite a few PPP webinars prior to this one. They're listed here, and they are available on our website, which you'll get these slides afterwards, and you can also just browse out to our website. Go to our resources page and find the recorded webinars, and you'll find all of these webinars out there for you. And we've got a link to certain resources. So Wegner CPAs, our resource center, the SBA. Obviously, we work to have our COVID-19 resource center. I will admit that I usually go to sba.gov as well. I've got our resource center up, but I also go to sba.gov. They've got access to all of the forms, all of the interim final rulings, links to the frequently asked questions, and the procedural notices. They also have links to some of the other loan programs that are out there. The economic injury disaster loan is still open and taking applications, I believe. So there are some other programs and funding available if you feel like you've maxed out all of your resources. We've also got a link to the AICPA, which is kind of our governing board. They've got resources there, a good link, a good list of frequently asked questions that have come from CPA firms and practitioners. And they also have a calculator that you can play around with a bit as well. Information again about myself and Melody. We did want to share that, Wegner is assisting our clients in filling out the loan forgiveness application form. So if you are a current client of Wegner, please make sure that you're reaching out to your current contact here at Wegner. So if you're an audit client or a tax client, please reach out to the person that you normally work with, and they will help get the process started with you. We've got a team of dedicated team of staff that have been well-versed in the applications and the calculations, and are currently in the midst of processing some applications for our clients already. So they are ready and willing to help. And we continue to update them and ourselves with all the training that comes out and new guidance that comes out as it happens. So I
two quick questions that are kind of a common through the thread here. One, can you clarify what gets entered on the applications for number of employees? Is that just headcount or FTEs?
Sure. So on each one of the applications, there are 2 questions at the top of the application that say number of employees at time of loan application and number of employees at the time that you're applying for forgiveness. Numbers are strictly head counts. They do not have anything to do with full-time equivalents. It's basically just straight number of employees. So you'll probably want to look back at what you put on your original loan application and put that same number on your forgiveness application, and then you'll just be counting the number of employees you have when you apply for forgiveness and entering that head count number there. The FTEs come into play when you're actually doing the eligible payroll expenses calculation.
The other common thread was, can you just go back and clarify that while the form says in terms of the safe harbor that due to and for applying using the easy form, that you weren't able to operate at the same level due to specific federal agencies listed, but there are state and local ones that count for that, because it's not clear obviously in the form itself.
So it isn't clear on the form itself. However, I have sat on a number of webinars and in a number of trainings that the general guidance appears to be that if it is local guidance, which, you know, the guidance has come down to counties and cities, you know, very, very small localities, that is going to be a viable reason that you would fit into that third bucket. So even though the application itself lists federal agencies, if you have guidance from your state and local agencies as well, that is going to be eligible. That's not on the form, but that's the guidance that's gotten from the trainings that we've attended and the guidance that we've seen. Since there isn't anything that has been federally mandated at this point, it's going to be hard to make the assumption that anybody can fall into a federally mandated, you know, guidance for how open somebody, what kind of capacity somebody could be, when they could be open. It's going to be hard to fall in line with anything that's federally regulated, since there isn't anything that's federally regulated right now. So. Anything else, Melody?
Those were the most common ones. So, and I know we're at the end of our time.
Great.
Awesome. Well, thank you both so much for all the information, and thank you everybody for joining us. We just mentioned one more time that you will receive a copy of these PowerPoint slides along with the recording to today's event. We hope you got a lot of great information and answered a lot of your questions. So again, the contact information for Kate and Melody is on the screen. Any last words, ladies?
Good luck with filing and waiting for more guidance. And like I mentioned, if you are a current client of Wegner CPAs, please reach out to your relationship manager or whoever it is that you work with on an ongoing basis. If you are looking for help in preparing the forms, we're here to help.
Awesome.
Just hang in there. This has been a tough time for everybody, but those who are such strong entrepreneur types and so committed to their missions and organizations, we are seeing some great things happen. So hang in there and keep at it.
Great messages. So thank you all again, and we look forward to seeing you at our next events. Thanks, ladies.
Thank you.